A lot of people overcomplicate day trading and ICT concepts, so today I'm going to be helping you out and explaining my simple 4-step trading strategy that actually works and has given me an 80% win rate in the market. So the first thing I always look for when I take a trade is a liquidity sweep of some sort. So imagine we have a low down here, right? And we're looking for longs. What I want to see is price come back down, take out that low, and then give us some bullish type of reaction, right? So the reason I want to see that low taken out is because, as we know, a lot of times traders are going to have their stop set right here. And once they get shaken out because we take out that low, you're more likely going to find a bullish reversal in these types of areas. And obviously this can work in a bearish sense too, right? You get this high right here, then you come up, you sweep it, and you're looking for shorts. Now, obviously this is just one of the 4 steps that I use to take my entries, but this is the first criteria. I need to see a liquidity sweep. Now, just to give you guys a good example on the charts of a liquidity sweep, right? We have this move down right here, and as you can see, we took out some of these internal range lows. We have these 2 right here that are very obvious. And what do? We instantly reverse and move right back up to the highs. So in this case, you see these big red candles, you might think, oh, this is bearish. We're probably going to dump now. Nope, the market's just taking out these stops that are resting inside this range and then continuing its path back up. And as we can see, it's been uptrending for a long time. So the best thing to do is to play liquidity sweeps in a way that favor the trend in the market. Now, the second step is that I want to see us trade into some higher time frame fair value gap. So say we have a big move up here, and then we come back down the next candle, and then we're kind of moving around, and then we end up coming back down and sweeping this low. Well, if that low is inside of a bullish fair value gap and I'm looking for longs, then that's the perfect scenario, right? Say we come up here, we have a bullish fair value gap, then we come down a few candles later to test it, we put on some type of wick inside of this gap. That's going to be an amazing area of liquidity to sweep, right? Because we're sweeping a low. Not only is it a low that we're sweeping, but we're also in a bullish fair value gap. We expected price to draw back to this anyway, and hopefully at that point we end up continuing higher. Now, the other thing that can happen in this strategy, so I'll give the bullish example of what I mean. Sometimes we might make a leg up, right? And then we chop around, we make a low, and then we end up sweeping that and rallying up. Now, what's going to happen sometimes is you'll see the low you're targeting a sweep on is not actually inside the fair value gap. Say the fair value gap is right here, and you're sweeping a low that's just outside of that gap, but you're still delivering off the gap, right? Because when you went below the low, you actually tagged the fair value gap. And this can obviously work in the reverse example. So if you're thinking of a bearish gap, just invert all of this. Now I'll give you guys a bearish example, just so you guys can visualize it, right? So we have this high, then we kind of chop around, we sweep it, and then continue downwards. So imagine we have this high right here, we've swept it. Now the fair value gap can be like this, right? And the high wasn't inside of it, but you still delivered off of it. Or you can have the fair value gap be something more like this, where obviously the high was inside the gap, right? Inside the gap right here, and you also delivered off of it. So if we look at this 1 hour chart right here, you'll actually see this is a great example of what I was just talking about. This is once again a bullish example, and I have better bullish examples for you guys because if you've been following the market, we've been in an uptrend for quite a few months now, ever since those lows in April. But we have this bullish fair value gap right here on the 1 hour chart, as you can see, and we come and deliver off of it. Now notice the liquidity we're sweeping is a low that's not inside of the fair value gap per se, but we still come down and extend into this bullish gap. So both of the criteria have been met in this case, right? We are sweeping a low and delivering off a fair value gap, looking for long. So those are the first 2 steps. And just for the sake of showing you guys an example, I'll show you a case where we do sweep a low inside of a fair value gap, so you can see that it can work either way, right? So we have this 2 hour fair value gap right here. It's bullish, and you can see we do have a low, a very obvious and notable low inside of this gap. Now what happens a little bit later, we end up sweeping that low inside the gap and delivering off of this gap, which gives us a big bullish reaction and takes us all the way to new highs, right? We take out the previous high right here, so that would have been a good time to take a trade if our other next 2 confluences also aligned. So I find my fair value gaps on the higher time frame. That's the 15-minute, 1 hour, 2 hour, and 4 hour charts. When I take my entries, I'm looking at the 5-minute, 3-minute, 2-minute, or 1 minute. And what am I looking for to take my actual entries? Well, obviously, once we've swept the liquidity and delivered off of a higher time frame fair value gap, then I'm looking for an inversion on the 1, 2, 3, or 5-minute charts. And so I'll show you an example of a good inverted fair value gap. So when I'm looking for these entries on the lower time frame, I'm looking for an inverted fair value gap, and basically you'll see what that means. So we have this bearish fair value gap right here, right? And we're at the lows, we're trading down. So I'm looking for anything to give me signals for a reversal, because in this exact case, we had already swept liquidity and we were trading in a higher time frame bullish fair value gap. So let's see, the very next candle, we end up inverting, right? Because we have this bullish close above this bearish fair value gap. And now if we zoom out, you can see there's also some pretty important additional context, right? We have swept the current low of day. We're trading under it. And then if you zoom all the way out, you can see that on the 4-hour chart, there's a big bullish fair value gap on the 4-hour chart right here. And we have just traded down into it. And now if we go back to the 5-minute chart, you can see that we tagged that gap and then quickly showed some bullish momentum. So once we've swept this low of day, which is a significant swing low, that's right above this bullish gap, right? This one's not a low inside of the gap, it's above it, but we make our way down far enough to tag the gap. So we tag this bullish imbalance. We end up inverting this 5-minute bearish gap, right? So we're now on the lower time frame looking for entries. This we had marked out pre-market on the 4-hour chart. Like I said, to look for your higher time frame fair value gaps, you want to look at the 15-minute, 1-hour, 2-hour, and 4-hour. That's what works best for me. So we have marked this 4-hour fair value gap at pre-market, right? We had marked this before market had opened. And I see a sweep liquidity and trade down into it. So immediately I'm starting to shift to my lower time frames, my 1, 2, 3, and 5-minute charts, and seeing where the best entry presents itself. And this time on the 5-minute chart, we got this big inversion. Now, the other key to these inversions is that you want strong momentum, right? So this takes me to a very important part of these inversions, and this is the 4th step, right? The 3rd step was the inversion. The 4th step is the conditions in which the inversion happens. So you want to be taking these inversion gaps when you have strong momentum, right? So you move down here, then you want to see something like this. You want to see some type of instantaneous, almost V-shaped recovery to invert that gap. What you don't want to see is something like this, where we're chopping for a few minutes, maybe 30, maybe 40, maybe an hour, and then we kind of sneak our way back up and invert that a while later. That's not a valid setup anymore. Especially when you're in this bullish fair value gap, you want to see some sort of good momentum at the lows, and you want to see a powerful close above this gap to invert it with authority. So you're basically, if I could sum it up, looking for a somewhat V-shaped, good momentum type of inversion. And once again, you're only looking for that once you've swept significant liquidity and once you've tapped right into a higher time frame fair value gap. So just to help you guys visualize, I also have a bearish example here. We have a tap into a higher time frame fair value gap. And then if you look at our entry chart, we have some serious liquidity sweeps that I'll mark out right now, right? So this is where we tapped into the fair value gap. We had swept this high right here, right? Which is a pretty obvious high. We had swept that. And then we end up having this great inversion on the 1-minute chart, as you can see. And there was good momentum behind it. And so you can see that we ended up dumping all the way down. We ended up taking out the lows right here, right? We take out these lows, and then we end up moving even farther down after that if anyone decided to hold. So I wanted to give you guys both bullish and bearish examples to explain, but it is really 4 steps, and it's completely beginner friendly and easy to understand if you just put your mind to it. So to reiterate again, you guys want to see a higher time frame fair value gap, which we have right here with this 4-hour chart. Then you want to see important levels of liquidity taken out. So this was the low of day up to this point right here, right? And we swept it, take it out. We move into this bullish fair value gap and start to deliver off of it. And how do I know we're successfully delivering off of it? Because we have a strong momentum inversion on our 5-minute entry time frame right here. And that takes us all the way back up for an amazing rip into the close. Now, once again, 15-minute, 1-hour, 2-hour, and 4-hour for marking your bias, which are fair value gaps, order blocks, whatever you want to use. I like to use the higher time frame fair value gaps. Then the 1, 2, 3, and 5 for your entries. That's going to give you a lot of options to take quick trades, and you're going to be able to react as price does. So remember, it's 4 steps, and overcomplicate it. Of course, there's other confluences you can use if you prefer to, but this is just what I use. There are little extra bits and pieces that I might put together to give myself even higher conviction, and I'll make more videos about those. But for now, what you need to know is that this is all you really need. A tap into some higher time frame level of importance, some type of imbalance, to sweep liquidity in or right by it, and then to get an inversion with momentum. It'll play every time. Whether you're bearish, right, and you're getting some tap into a bearish gap and dumping, or whether you're bullish and you're tapping into a bullish gap and pumping, This strategy will not fail you. It's given me a great win rate, and I encourage you guys to back test it for yourselves. Do not take it from me. Go and back test the strategy. Don't even put your money on the line at first. Check it out. You'll see that it works, and then you'll be confident enough to trade it. Now, if you've made it this far into the video, you're probably serious about trading. If that's the case, make sure to like and subscribe. I post educational content like this all the time. Also, check out my free Discord. It's linked to my YouTube bio. No email, no credit card, no BS. Just come in there and watch me live trade every day. And with that being said, I hope you all enjoyed the video, and I hope you all get amazing value out of this strategy. Like I said, make sure to like and sub if you enjoyed it. Peace.